ExamPrep.School. Arizona Property, Commercial and Non-Commercial, Insurance Producer Exam. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Business Owner's Policy, Commercial Property Policies, Dwelling Policy Concepts, Federal Laws and Regulations, General Insurance Concepts, Homeowners Policy Concepts, Insurance Regulation, Other Types of Property Insurance, Property Insurance Basics. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Arizona Revised Statutes, Section 20-285, which of the following is a mandatory requirement for an individual to obtain a resident insurance producer license? A. Submission of a certificate of completion from an approved pre-licensing education provider. B. Proof of at least 1 year of prior employment with an insurance company. C. Maintenance of a minimum personal credit score of 700. D. Possession of a valid Arizona driver license. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer is submission of a certificate of completion from an approved pre-licensing education provider because ARS 20-285 specifically requires applicants to complete and document approved pre-licensing coursework. The other options are not statutory prerequisites under that section. Reason B is not correct. Evidence of prior employment with an insurance company is not stipulated by ARS 20-285. Reason C is not correct. A personal credit score is not a licensing eligibility criterion in that statute. Reason D is not correct. Holding a driver license is not among the statutory requirements for a producer license. Question 2. Which document meets Arizona's lawful presence verification requirement for an insurance license applicant under state law and attorney general guidelines? A. Unexpired U.S. passport. B. Social security card without any immigration annotations. C. Arizona driver license expired more than 1 year ago. D. Foreign passport without U.S. entry stamps or visa endorsements. The correct answer is A. The correct answer is an unexpired U.S. passport because Arizona law and attorney general guidelines list it as an acceptable proof of lawful presence. Other documents listed are either not accepted or do not by themselves verify lawful status. Reason B is not correct. A social security card alone does not establish lawful presence under the guidelines. Reason C is not correct. A driver license expired over 1 year ago is not valid for verification. Reason D is not correct. A foreign passport without U.S. entry stamps or visas does not confirm lawful status. Question 3. Under Arizona continuing education requirements, a licensed property producer must complete how many continuing education credit hours per renewal period, and how many of those hours must be in insurance ethics? A. 24 total hours, including at least 3 hours in insurance ethics. B. 24 total hours, including at least 12 hours in insurance ethics. C. 36 total hours, including at least 3 hours in insurance ethics. D. 20 total hours, including at least 3 hours in insurance ethics. The correct answer is A. Arizona requires licensed property producers to complete 24 continuing education credit hours every 24 months, with at least 3 of those hours dedicated to insurance ethics. Reason B is not correct. The total hours are correct, but the ethics requirement is overstated. Only 3 ethics hours are mandated. Reason C is not correct. The ethics requirement is correct, but the total hours exceed the statutory 24-hour biennial requirement. Reason D is not correct. The ethics requirement is correct, but the total hours fall short of the 24-hour mandate. Question 4. A licensed Arizona insurance producer reviews a list of courses to satisfy the state's continuing education requirements, which mandate that credits come from approved subject areas. Which of the following courses would be accepted for credit by the Arizona Department of Insurance? A. Cybersecurity compliance for healthcare facilities. B. Advanced federal income tax planning for LLC owners. C. Risk management techniques for commercial property insurance policies. D. Ethical decision-making and legal mediation. The correct answer is C. The course on risk management for commercial property insurance aligns directly with an approved continuing education subject area covering risk management for insurance products, whereas the other courses are outside the scope of insurance CE requirements. Reason A is not correct. Although cybersecurity can be relevant, the course is aimed at healthcare facilities, not insurance operations, and thus is not approved for insurance CE credit. Reason B is not correct. This course focuses on federal tax planning rather than insurance-specific content, so it does not meet Arizona's insurance CE requirements. Reason D is not correct. This legal mediation ethics course does not address insurance ethics or regulations, and therefore does not qualify for insurance continuing education credit. Question 5. Under Arizona insurance law, which of the following examples constitutes prohibited false advertising of an insurance policy? A. Publishing that premium levels may be adjusted following regulatory filings. B. Asserting that the insurer's policy obligations are guaranteed by the state of Arizona. C. Including statutory citations for standard perils covered in the advertisement. D. Using the insurer's AM Best Financial Strength rating in promotional materials. The correct answer is B. This option is correct because Arizona statutes prohibit insurers from misrepresenting that their policy obligations are backed or guaranteed by the state. Reason A is not correct. Regulating that premiums change upon approved filings is permissible and not misrepresentation. Reason C is not correct. Referencing statutes for covered perils does not mislead and is acceptable advertising. Reason D is not correct. Featuring a legitimate financial rating is allowed and not a false statement about policy coverage. Question 6. Which of the following would not be considered a permissible purpose for obtaining a consumer report under the Fair Credit Reporting Act? A. A property insurer requesting a report to underwrite a homeowner's policy. B. A prospective landlord evaluating a rental applicant. C. An employer conducting a background check for a safety-sensitive position. D. An insurance agent sending unsolicited consumer reports to market new policies. The correct answer is D. This option is correct because the FCRA permits consumer reports only for specific purposes, such as underwriting, tenant screening, and employment background checks. Using a report for unsolicited marketing is not an authorized use. Reason A is not correct. Obtaining a report to underwrite an insurance policy is explicitly permitted under the FCRA. Reason B is not correct. Evaluating a rental applicant is a recognized permissible purpose for accessing a consumer report. Reason C is not correct. Conducting employment background checks is allowed under the FCRA when proper disclosures are made. Question 7. Under 18 U.S.C. 1033, which of the following is prohibited for a person convicted of a felony involving dishonesty or breach of trust without written consent from the state insurance commissioner? A. Offering casualty actuarial services to manufacturing companies. B. Providing investment advice on municipal bonds unrelated to insurance. C. Consulting on employee benefit plan design without an insurance license. D. Acting as an insurance broker for a property and casualty insurer. The correct answer is D. This option is correct because under Section 1033, individuals convicted of felonies involving dishonesty or breach of trust are barred from engaging in the business of insurance, which specifically includes acting as an insurance broker, absent written state consent. Reason A is not correct. Offering actuarial services to manufacturers is not defined as the business of insurance for the purposes of the prohibition. Reason B is not correct. Providing investment advice unrelated to insurance does not constitute engaging in the business of insurance under the statute. Reason C is not correct. Consulting on benefit plan design without an insurance license falls outside the scope of acting as an insurance producer. Question 8. An Arizona insurance producer calls a consumer 20 months after the consumer purchased a homeowner's policy to offer flood coverage. The consumer's phone number has been on the National Do Not Call registry for 2 years, and the producer has not obtained any written permission. Which statement is correct under the Do Not Call rules? A. The call is permissible because the existing business relationship for insurance products lasts 24 months after purchase. B. The call is permissible because cross-selling related insurance during an inquiry period is exempt from the registry. C. The call violates the registry because the existing business relationship period expired after 18 months and no written consent was obtained. D. The call violates the registry because insurers are never exempt from do not call restrictions. The correct answer is C. This call violates the do not call rules because the producer's existing business relationship with the consumer ended at 18 months post-purchase, and no written consent was secured for calls after that period. Reason A is not correct. This is incorrect because the allowable existing business relationship window for insurance calls is 18 months, not 24. Reason B is not correct. This is incorrect because the inquiry exemption lasts only 3 months from the consumer's inquiry, not 20 months. Reason D is not correct. This is incorrect because insurers can be exempt within the existing business relationship period. The violation here is due to timing, not a total prohibition on insurer calls. Question 9. Which of the following best distinguishes pure risk from speculative risk in property insurance? A. Pure risk arises solely from natural causes, while speculative risk stems exclusively from financial transactions. B. Pure risk includes potential for profit, whereas speculative risk produces only losses. C. Pure risk presents only the possibility of loss or no change, while speculative risk includes the potential for gain. D. Pure risk often involves moral hazard, whereas speculative risk is always uninsurable. The correct answer is C. The correct answer is that pure risk involves only the chance of loss or no loss, whereas speculative risk carries the possibility of financial gain or loss. Reason A is not correct. This confuses the sources of risk rather than their outcomes, misdefining both risk types. Reason B is not correct. This reverses the definitions by attributing profit potential to pure risk, which is incorrect. Reason D is not correct. This misstates insurability and moral hazard aspects, making it factually wrong. Question 10. In property insurance contracts, which of these best defines a peril? A. The transfer of risk from the insured to the insurer. B. A condition that increases the likelihood or severity of a loss. C. The monetary value of the insured property at the time of loss. D. The cause of loss insured against under the policy. The correct answer is D. The correct answer is that a peril is the specific cause of loss covered by the policy, such as fire or theft. Reason A is not correct. This describes risk transfer, not the cause of loss. Reason B is not correct. This describes a hazard rather than a peril by referring to conditions affecting loss likelihood. Reason C is not correct. This refers to valuation, not the cause of loss. Question 11. Which statement best defines a hazard in property insurance and its role in loss frequency and severity? A. The insured event that triggers coverage under the policy. B. A condition that increases the probability or severity of a loss. C. Regulatory requirements mandating insurer behavior. D. The monetary limit an insurer will pay on a covered property loss. The correct answer is B. The correct answer is that a hazard is any condition that raises the likelihood or seriousness of a loss, affecting frequency and severity. Reason A is not correct. This describes a peril or trigger event, not a condition influencing loss likelihood. Reason C is not correct. This refers to regulations which are unrelated to hazard definitions. Reason D is not correct. This defines a policy limit, not a condition affecting loss. Question 12. During the underwriting of a single-family home, an underwriter notes 3 risk factors: an abandoned dry cleaning site nearby with soil contamination, the homeowner having installed a monitored alarm system, and exposed knob and tube wiring in the attic. Which of these is an example of a physical hazard in residential property underwriting? A. Exposed knob and tube wiring in the attic. B. Installation of a monitored alarm system. C. Abandoned dry cleaning site with soil contamination. D. Homeowner frequently changing the locks. The correct answer is A. A physical hazard is a tangible condition of the property that increases the likelihood or severity of loss. Exposed knob and tube wiring creates a higher risk of electrical fires and therefore constitutes a physical hazard. Reason B is not correct. A monitored alarm system reduces loss potential and is a control measure rather than a hazard. Reason C is not correct. Soil contamination at an off-site dry cleaning plant is an environmental hazard, not a physical hazard of the insured property. Reason D is not correct. Changing locks frequently relates to security practices, not a physical characteristic that increases loss likelihood. Question 13. An applicant submits a personal property policy application for a collection of antiques and knowingly lists each item's insured value at double its true market worth. Which behavior exemplifies a moral hazard in personal property insurance? A. Understating prior theft claims on the application. B. Selecting a higher deductible to reduce the premium. C. Storing antiques in a fire-resistant safe. D. Listing antiques at twice their actual market value. The correct answer is D. Moral hazard arises from the insured's dishonesty or intent to profit from a loss. Deliberately overstating item values incentivizes filing inflated claims, representing a moral hazard. Reason A is not correct. Misstating prior claims is a misrepresentation in underwriting, but moral hazard involves post-policy dishonest actions that increase loss probability. Reason B is not correct. Choosing a higher deductible affects cost sharing, but does not involve dishonesty or increased chance of intentional loss. Reason C is not correct. Using a fire-resistant safe reduces risk and is a loss control measure, not a moral hazard. Question 14. Which of the following is not one of the 5 primary methods of handling risk in property insurance? A. Risk retention. B. Risk duplication. C. Risk avoidance. D. Risk transfer. The correct answer is B. The correct answer is risk duplication. The 5 primary methods are avoidance, retention, reduction, transfer, and financing or sharing. Reason A is not correct. Risk retention is a standard method where the insured retains part or all of a risk. Reason C is not correct. Risk avoidance is a principal method that eliminates exposure by not engaging in the activity. Reason D is not correct. Risk transfer is a primary approach that shifts the financial consequences to another party. Question 15. Which of the following is a passive fire protection technique used to reduce residential fire exposures? A. Installation of automatic sprinkler systems. B. Implementation of emergency evacuation drills. C. Incorporation of fire-resistive structural assemblies. D. Deployment of smoke detector alarms. The correct answer is C. The correct answer is incorporation of fire-resistive structural assemblies, which is a passive fire protection method integrated into the building design. Reason A is not correct. Automatic sprinkler systems are active fire suppression systems, not passive. Reason B is not correct. Emergency evacuation drills are active preparedness measures rather than passive protection. Reason D is not correct. Smoke detector alarms are active detection devices, not passive design features. Question 16. In a commercial lease, which non-insurance risk transfer mechanism shifts liability for property damage from landlord to tenant? A. Requirement for tenant to maintain commercial liability insurance. B. Indemnification agreement in the lease contract. C. Escrow arrangement for damage repair reserves. D. Arbitration provision for property-related disputes. The correct answer is B. The correct answer is an indemnification agreement, which contractually transfers liability for specified losses to the tenant. Reason A is not correct. Requiring insurance is an insurance transfer, not a non-insurance mechanism. Reason C is not correct. Escrow for repair funds is a financial arrangement, not a risk transfer contract clause. Reason D is not correct. An arbitration provision addresses dispute resolution, not liability transfer. Question 17. A commercial property policy includes a $50,000 self-insured retention that applies separately to each building. A fire causes an $80,000 loss to Building A and a $120,000 loss to Building B. How much will the insurer pay under this retention arrangement? A. $200,000. B. $100,000. C. $150,000. D. $80,000. The correct answer is B. The self-insured retention of $50,000 applies to each building separately. The insurer pays $30,000 on the first loss and $70,000 on the second, totaling $100,000. Reason A is not correct. This assumes the insurer covers the full amount of both losses without applying the retention requirement. Reason C is not correct. This applies the retention only once rather than separately to each building's loss. Reason D is not correct. This reflects payment for only the first building's loss without recognizing the second loss payment. Question 18. Which of the following best describes a fundamental difference between stock insurance companies and mutual insurance companies? A. Stock insurers are owned by shareholders who elect a board and receive dividends. Mutual insurers are owned by policyholders who share in surplus distributions. B. Stock insurers are owned by policyholders who vote on policy changes. Mutual insurers are owned by shareholders who share in underwriting profits. C. Both stock and mutual insurers distribute surplus to all policyholders equally, but mutual insurers also pay dividends to shareholders. D. Stock insurers must obtain policyholder approval for changes in articles of incorporation. Mutual insurers do not require member votes. The correct answer is A. Stock insurers are capitalized by shareholders expecting dividends, whereas mutual insurers are owned by policyholders who receive surplus distributions. Reason B is not correct. This statement incorrectly reverses the ownership structures of stock and mutual insurers. Reason C is not correct. Mutual insurers do not pay dividends to shareholders. Surplus distributions go only to policyholders. Reason D is not correct. Stock insurers do not require policyholder votes for corporate changes. Mutual insurers require member approval instead. Question 19. Which statement accurately describes a characteristic of a reciprocal insurance exchange used for property risk underwriting? A. Policyholders act as subscribers who exchange contracts of indemnity and appoint an attorney-in-fact to manage the exchange. B. Reciprocal exchanges are capitalized by issuing shares to investors who receive periodic dividends. C. Reciprocal exchanges operate as mutual companies owned by policyholders but lack a formal management agent. D. Each subscriber in a reciprocal exchange holds equity interest in other subscribers rather than transferring indemnity obligations. The correct answer is A. A reciprocal exchange is an unincorporated association where subscribers exchange indemnity contracts and designate an attorney-in-fact for management. Reason B is not correct. Reciprocal exchanges do not issue shares or pay dividends. They are unincorporated and subscriber-managed. Reason C is not correct. Mutual companies differ by being incorporated and directly owned by policyholders, not lacking a management agent. Reason D is not correct. Subscribers do transfer indemnity obligations through reciprocal contracts rather than holding equity interests. Question 20. Which of the following best describes the role of Lloyd's associations in underwriting unusual property exposures? A. They consist of underwriting syndicates whose members subscribe to portions of each risk, sharing profits and losses. B. They function as mutual insurers where policyholders share surplus through annual dividend distributions. C. They underwrite risk directly using corporate capital without individual underwriters. D. They issue standard admitted policy forms filed with state insurance departments like traditional carriers. The correct answer is A. Lloyd's is a marketplace of syndicates. Individual underwriters subscribe to portions of each risk and share outcomes. Reason B is not correct. Lloyd's is not a mutual insurer. It is a market of syndicates, not policyholder-owned with dividend sharing. Reason C is not correct. Lloyd's relies on individual underwriting members, not solely corporate capital. Reason D is not correct. Lloyd's operates as a non-admitted market and underwrites unique forms, not standard admitted filings. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.